Recording. Awesome. If this is your first time joining, thank you for joining. Also, all the live events do get recorded. So all the previous recorded live Zooms are going to be available in the chat. I dropped the address just now. So if you want to check any of those, by all means, go check it out there as well too. Plus any additional content that can definitely help you out in your real estate wholesaling analysis or just your real estate wholesaling business overall. All right, just give me a few minutes. All right, cool. All right, cool. So it looks like we have an address from somebody. So we'll get to it really quick after the presentation. So let me go ahead and get started. So welcome to, I think this is episode like 25 or part 25. I don't know. It's just been, there's so many series of these happening already. I'm not, I don't know what's happening at this point, but welcome to another real estate wholesaling analysis. I started this series because part of the process that even I struggled in the beginning as well too, when it comes to like analyzing real estate deals. Even if you're like an investor yourself as well too, you're trying to always figure out like the best leverage that you can to get like the best price. That way you can either get a better ROI on your investment if you track ROI or if you track margins or whatever it is they use. It's always good to like analyze. If you don't happen to have like your real estate license whatsoever, it's not like you need your real estate license to do business in real estate, but it just helps out when looking for other properties in that market if you don't happen to know that market whatsoever. So real estate wholesaling analysis, it's pretty much the same as just real estate analyzing if you're an investor like into yourself, because that's the concept that I teach is putting yourself into the investor's foots and shoes. And so that way you can get that experience of just knowing how to do like your due diligence properly. And if you were to buy the property for yourself, how much would you buy it for yourself as well too? And part of that process as well too is additionally adding the wholesaling step into it, which is basically adding your wholesale fee, but it has to make sense as well too for the investor side as well too. But part of the process of real estate wholesaling is when you analyze deals, in the beginning, it does take a long time because again, you have to understand the fundamentals from investors. That way, again, so it just takes a little bit of time in the beginning. So it's perfectly fine if you're struggling. It just takes repetition, just like anything else that you do in your life. If you're heading over to work, it took a long time for you to master like the work that you do. If you're learning a new hobby or whatever it is, anything in life overall, it just takes repetitions overall. So when it comes now that we're planning some things into like real estate wholesaling, then we're going to be considering as a business, but also again, make sure it makes sense in that business side. So real estate wholesaling overall, the business of wholesaling, there are a significant amount of steps that you do have to take. You can go either two ways. If you have money and then you want to spend that money to expedite your process, then it's simply just buying leads and then buying leads that are really motivated. There's a bunch of platforms out there. Again, that's if you have the money. So you have money to spend $3, $4, $5, $800 on a single lead. That again is going to give you a way bigger return. But again, you have to be able to talk to the sellers directly. So you do have to have some type of communication skills. And then closing skills as well too, and also again targeting pain points. So it's kind of like sales that you're pitching to make sure that you're able to get like the deal in. So you can take that route if you happen to have the money. If you're like most real estate wholesalers that are starting up, that you don't have the money, then now you're going to take a little bit a longer route. But that longer route, you're pretty much learning all the fundamental steps, and also you're putting in the hard work. So the hard work that you put in is definitely going to give you a bigger return. So it just comes down to which side is going to be your best route for you, depending on your situation. So you do have to understand all these steps. The main one that I focus on this series is estimating the repairs and estimating what the offer should be like. Again, putting myself as the investor in this case. With that being said, a part of the process when we start analyzing deals, the very first thing we have to understand is what the property's value is. If it needs any updates overall, if you're like a first-time home buyer, then you don't need to find out what the property's ARV is. The property is already fully updated. Or if you're a first-time home buyer, you're kind of looking for properties that are already in great condition, that you don't have to do anything, so you really fall in love with it. Unless you're looking for like an investment where you're willing to put in the work, either yourself or you and your partner, or you and a couple friends to like fix up the property. So it's like a project property, but also a bigger investment. That's something that you do have to learn. Not everybody dives into it. They just go blindly into that. But it is always really good to like understand what the property could be worth if you're working on a project that needs any type of updates. That can be from a little repairs to a full work an entire home. But what we want to understand about ARV is, again, finding out if the area that we're looking into, either to wholesale or to fix and flip, to buy and hold, if the property needs some updates, we have to understand how much potential does the property have in that case. Now, as an investor, or if you're working with investors or buyers, cash buyers, financial buyers, hedge funds, whoever it is that you're working with, all of them are going to be doing their due diligence very differently. And what I talk about due diligence is they're going to do their analysis. They're going to do their numbers very differently across the board. Some of them are going to put the repairs first before the strategy. Some of them put the strategy first and then the repairs afterwards. Some of them just go do a whole 180 on their analysis and how to calculate like the numbers to make sure that they're able to get like their profit. If it's a dollar profit, if it's a percentage profit, or again, if it's going to be a ROI, whatever it is that they're trying to look that makes them think that it's a deal, then again, that's the way they're going to be doing the thing. But the thing about buyers, they're all going to be doing things very differently. So if you're networking or you're reaching out to buyers, you have to understand how they calculate their numbers on their side, and of course, understand like their buy box as well too, just in case you ever come across some properties that best fit that specific A buyer. So it's always good to keep a track of all your buyers, and then when you're coming across either properties that are on market or off market, then by all means, it's going to be very differently for to market that specific property that you're working on to different buyers. So it really depends on that. But understand ARV first and how the buyers are going to be calculating the repairs. But of course, part of the ARV is we can't know what the ARV on the property is, besides also knowing the repairs as well too. Because sometimes we do have to, most of the time we do have to calculate repairs. It does make it easier if you have like a number to bring over to your buyers, so that way they already, you're kind of setting their expectations on what they're jumping themselves into. If it's going to be a fix and flip strategy, or if it's going to be a buy and hold strategy, if it's going to be a quick repairs for Airbnb, whatever the strategy is, again, it's always good to bring some small details, so that way it helps them expedite the process of making a decision. Now, whenever we're looking at repairs, I like to stick with average repairs per square foot. The reason why is because no matter what the number it is that I bring over to a buyer, they're always going to end up telling me that it needs either more or it needs less. So an example is I'm looking at a property that needs light repairs. It needs $30,000 of light repairs. To investor number one, the repairs are going to be the investor's going to end up telling me that it actually needs $40,000, not $30,000. I'll bring it to investor number two. The investor's going to end up telling me that it needs that he or she can get away with $20,000. So the spectrum, it's again going to be very differently from everybody, because again, everybody has different experiences in terms of like real estate, and also depending on the work that they want to put into like the property. Sometimes they want to go as luxury to bring, or even just to do a complete 180 on the property, so that way they can bring a huge significant value onto it. So again, the sky's this limit on repairs. But if you're able to understand as well too, again, putting yourself into the investor's shoes, understand that it always going to be varying depending on the kind of work that you're going to be doing. And I hate using those words. It depends, but it's the most common answer you're going to get across from everybody, from wholesalers, from real estate agents, from title companies, from construction companies. Or literally everybody's going to tell you, well, it depends if we end up doing this or we do that or you do this. Again, not every property is the same. So that's why you have to do your due diligence. And from experience and just doing multiple deals, or AKA repetitions, then that's how you truly are going to be learning. But looking at these repairs, light repairs are going to be pretty simple, $10 to $20 per square foot. These are going to be properties that are in great shape. They don't, the property has been really well taken care of. It's just going to be little things that the color of the home, it's like kind of outdated, so it makes it look a little bit older. So sometimes it's just bringing a new color in. Here's an example of one right over here of this color, like this light green, light gray color. Gray and white is the most popular colors. Black and white, or again a green or white type of color is going to be that color scheme as well too. Occasionally we come across like a light blue or like a baby blue or a sky blue. It's going to be those type of colors that you're seeing. So you're going to be one of those four main color schemes where we have to update the paint on the property, and of course maybe some carpet or just change like the flooring, just little touches here and there. Now looking to repair properties or fix and flip properties. Even light repairs is a fix and flip, but now we're getting more to like the heavy jobs of it. Usually for these average repairs, that could be between $25 to $40 per square foot. Now we start getting into like the main areas that need work. Main areas are going to be entrance, like off the bat, it's could be either the flooring, like, or like what makes the home unique as soon as the homeowner walks in. Of course, another popular area is going to be the kitchen. It's going to be the bathrooms. It's going to be the flooring. It's going to be the paint. It's going to be the windows. It's going to be the doors. So now we start getting more into those, again, some major repairs. Occasionally, you'll probably have like the roof, depending on how old the roof is. Maybe the heat, the HVAC, water heater. It's just little things that need to get updated as well too, and possibly electricals or utilities that, again, just extra things that are gonna end up touching bases. And always be aware about this with every case. Occasionally, there's always going to be that unexpected expense on a deal as well too, when your buyer is doing the due diligence or checking out the property, because again, they're scheduling appointments with you once you have the property in the contract. Then either they have themselves or they have like a contractor checking out the property. They're gonna end up telling you exactly what the property needs, which you should take note into yourself of future properties that you come across. All right, cool. Now I'm getting I worked with a contractor in the past, and they're able to let me know roughly how much the repairs are. So both it's good to like network with pretty much anybody and everybody from when it comes to like real estate. Again, it just helps you out, give like an insight or get a perspective on things overall. Next on the repairs list is the gut job repairs, or AKA the complete demolish repairs, what I like to call, is because these gut job repairs are, you're most likely going to end up either demolishing the whole property, where you want to start all over. The only thing that's going to stay is the foundation of the property, or maybe like the concrete slab, if it's like a crawl space or whatever it is. But pretty much everything has to be stripped down on these type of properties. Usually see a lot of these in Chicago. That's like a hot area. Sometimes Indiana. I mean, you're gonna see them in a lot of states, but they're heavily in Chicago because there's a lot of vacant land and properties out there that just, and there's a lot of fires as well too. It's just like there's bad areas overall over there. But again, there are in all over the US as well too. But usually with these properties, they are going to take a full load of work into it. And again, you're probably going to have the unexpected extra thing into it that's going to make it even more costly as well too. But again, stick to the average repairs, because at the end, it really comes down to the investor's experience, who they work with as well too, in terms of like contractors and getting the job done. So it's really going to vary. So I don't like to niche down to the dollar amount that they're going to be spending, because it's always going to be more or less. Now, the next process of analyzing deals is we got to look for properties that have been selling, which leads to the process of the ARV, is looking for properties that have been fully fixed up in the area, to help you understand what the potentials are in terms of like that investment. When we're looking for those comparables or comps, part of that is we do have to set certain parameters when looking at these comps. And what these parameters are going to look like is going to be pretty much oh, sorry, I don't know what's going on here. What's pretty much gonna look like on these parameters is going to be the following. First is going to be the living space square footage of the property. Next is going to be the half a mile to 1 mile radius for looking for these comps. But the only thing with the half mile to 1 mile, even you can go to like 2 miles if you want to. But the only thing with these with this radius is you're always going to be coming across major traffic roads. And the thing with these major traffic roads is it's going to be kind of like a borderline where that neighborhood completely stops. The reason why is because it's considered like a dangerous area. It really depends on appraisers how they appraise it, but they do consider these major roads as a major blockage or a split between two neighborhoods. So the neighborhood on the left is going to be one neighborhood, and the neighborhood on the right side is going to be a whole neighborhood, a whole different neighborhood. Because again, you're going to have constant flow of traffic from commuters, people getting to and from work. You're gonna have buses, delivery trucks, semi trucks, construction trucks. Again, it's gonna be a full workflow in just traffic overall on a daily basis. And then usually homes that are sitting on these streets that are busy, if they're facing like them, or maybe even sometimes here in California, you find properties that are off the on the off ramp. So as soon as you're getting off the freeway, the garage or the entrance to the home is literally off the freeway. And again, those properties are high risk or something bad happening. It's just a high risk liability. So usually you want to add a discount or whatever the property is being asked for in terms of like the pricing. Usually it's like 10% from it, just because again, it's sitting on a high risk road overall. Additionally, when we're looking at comps or comparables, is make sure that we stick within the same year, so apples to apples. Don't compare a 1960s home to a 2024 brand new construction home, because the materials and the permits and everything's going to be very differently. Upgrading a home to get new permits, that's where it needs you have to get like new permits for that. But the home is never going to be identical to a 2024 home. So again, you want to compare apples to apples, so stick within the same years. And also looking for comps, look for 3 comps, at least 3 comps, nothing less than that. If you're not able to find anything more than 3 comps or at least 3 comps, then it's always best to move forward and look for something else. Look for maybe a better area, or maybe it might have been just that property that the square footage was just off. It had a bunch of information, especially if you don't have access to the MLS, or maybe the seller, the homeowner, maybe added some extra square footage. It is essential for you to get the specifics on that property, so that way you're able to analyze properties very efficiently, because you're sometimes you are going to come across properties where the square footage, it's just literally all over the place. On Redfin, it's going to say one square footage. Zillow, another. Other resources going to say another square footage. The county clerk's office or the county records office is going to be saying a whole different square footage as well too. So the only one that knows the exact square footage, it's either going to be the homeowner, if they happen to know, or if not, it's going to be the appraiser once you're able to get a understanding, if you happen to get like the property in the contract. And then the appraiser is going to let you know exactly what the square footage of that property is going to be overall. All right. Now, part of the next process is I do see that we have a property that was provided by one of the guests. We are going to be using a few resources to help me expedite my process. Of course, when I'm analyzing these deals, it's going to take a little bit longer because I'm trying to explain to you some strategies, some tips and tricks that can help you analyze like your deals. I don't expect you for you to learn and master how I learn in terms of like analyzing deals. And I'm going to be using from resources like Zillow, Realtor, PropWire, and Redfin because I'm not an agent myself, and I don't expect a lot of you to be agents either. If you're an agent, you have a great advantage, but it's also good to know if you happen to know how an investor works as well too. And of course, I'm going to be using my calculators that I've designed along my way to help me expedite my process, so I can understand where if the property happens to be on market, what the agent is telling me. If the property has to be off market, basically also put in the spot of what their seller is telling me, and also understanding where the buyers or my end buyers are going to be at in terms of their analysis. And so with that being said, let's just go and step right into it. And let me stop sharing this and switch over to the other side. If there's any questions along the way, just go ahead and drop it in the chat. If there's none, that's perfectly fine as well too. But let me close this out. Right, there it is. So let me head over to Redfin. Let me pull up Zillow, and let me pull up PropWire. And I already have my there's going to be the ARV calculator, which could help me expedite my process in terms of like analyzing deals. Then I'm going to do another deal if there's no multifamily deals or rental deals. I'm going to be using the complete rental deal as well too. So also, by the way, I put it in the chat. If you want to have access to the calculators, you can get it for 50% off by using coupon code Super Bowl 24. Today and tomorrow are the last final days. So make sure you get those before anything changes. And let's see here. So we have this address. Thank you, Eric. I appreciate it. But let's see. Not too many details on the property. It is up for auction as property taxes have not been paid on it. Okay, so usually for auctions, auctions are going to be a whole different thing. They usually go way above asking on, or they're really close to they're like always going to be overpriced. Just letting you know about auctions. So with this property, especially if it's already going to be auctioned by the bank, so the bank probably owns the property, and so the seller has no control at this point. And again, auctions always go way overpriced. If you were to be working with the seller directly, so let's say you come across the property, let's say we come across this property, but now you're working with the seller directly and you're getting the information from the seller directly that they're behind on their taxes, then this will be more of understanding how much debt they have left. So here will be an example. Let me pull this up and see what kind of information we have from this address over here. So I don't know where and that's the other thing, we never know where the auction is going to be starting for this property as well too. But let's see here. So the property is free and clear, so it says that it's 100% equitable. So it's just like the taxes that are just not being paid like on the property for whatever reason. I'm not sure, maybe the seller passed away since it is in a trust. Um, off the bat, just in case, and there's no other information or any other properties owned by this trust as well too. Um, so the only thing with this is just going to be mainly taxes on how far back they're in. Because what I was going to say is with this, when we come across properties that are auctions and they're behind taxes, they're not only going to be behind taxes, but also probably have like a mortgage or debt on the property. So this is where we have to apply the debt into the property. So let's say the property it's selling for, I see 1.1 on Zillow, I mean on Redfin, and 1.3. So I'm gonna say this property, if they're behind in taxes, they're probably gonna be selling at 990, but not 9 million, 990. Awesome. And then here's where you want to put the taxes of the property. I see that it's a 2740 square footage home. So 2740. Now the debt, Again, it's understanding if there's a debt on the property, so that'll be mortgage and also taxes as well too. Liens, also understanding if there's liens on the property, maybe from any previous work as well too. Maybe the roof, the front yard, just something that was done to like the property to cause any other liens as well too. So you want to sum all these up, and the property's in California, so there's no basement over here whatsoever. There are no pictures. I'm not sure if you have pictures or if you've seen what the property looks like internally, if it's still the same as I'm looking over here on Redfin, which the home looks like it's in great condition. It's just a little bit outdated because this was built in 2007. So this is almost 20 years ago, just 3 years apart from being 20 years ago. And the thing with this property is, again, it's just a little bit outdated. So this will be kind of those light repairs I was just mentioning. A great home, great backyard. What is that? 1, 2, 3 car garage. Most likely it's on an HOA area or neighborhood, just because I see that the property is here. Let me see. Usually tells you if it's HOA or no HOA. Tax delinquent, yes. Tax delinquent year, 3 years. So that's why. And here's the other thing with tax delinquencies, it usually takes 5 years until the bank is able to do something about it, or 5 years until the homeowner is able to take advantage of it. So this property has been tax delinquent since 2017. So if you're looking for tax delinquencies, you'll have to look at 2017, 2018, because it takes 5 years until the bank actually does something about it, which in this case, it gets auctioned. And it depends on the tax amount, which it tells us over here. They're behind $7,900 in taxes. Usually when as tax delinquency, if you happen to be like the person who wants to pay the taxes, and then the homeowner, I believe, has like 90 days for them to pay you back. If they don't pay you back within the 90 days, then you are able to take full ownership of the home. But again, that usually is not the case. That's why they do a lot of auctions. So it's really rare for the homeowner to, depending on their situation, to like to get the home back. It's either the bank, or if you happen to get lucky and they don't pay you back, if you happen to pay the full taxes that they owe, then you have full privilege on that on the property overall. So they're assessing the property to be at 667, but again, usually these properties go way above their estimated price. So they always start as low, and then the bank is the first one to put a bid on it. And as soon as the auction starts, the auctioneer will tell you bank's bid is at blank, and then everyone gets the price, and it's like, oh man, yeah, this property is not going to be making a deal. So the homeowner is only behind $7,900 in taxes. The property does need some light repairs. 2007 built, $10 to $20 per square foot. Just very minimal work. Again, it's going to be a lot of paint if it happens to be based on these pictures as well too. Kitchen, maybe you can change some of the kitchen as well too. It's usually going to be appliances. Just bring new appliances. It just depends on what has been done to the property, if anything, and or if you want to do some extra work on this, just because it's sitting on a great neighborhood, you can scale it and bring update like the kitchen overall. I see that the bathroom is a little bit outdated as well too. Has like that metal window, so this can be a way better, luxurious bathroom or walk-in shower bathroom with like a sliding glass door, if anything. So these are going to be some extra projects, but again, now you're spending a little bit more money to make more money and bring extra value to like the property. So that's, like I said, as an investor, I work with a lot of buyers. So it just really depends on what you want to do. If you want to maybe rent it out, you probably going to be doing less than $50,000 in repairs as well too. Just very minimal work, just quick paint and change the whole color scheme of the paint. And that's even painting like the cabinets as well too, just painting white. It's just sanding it down, priming it, and then painting it white or whatever color. It's pretty simple, guys. But again, it really depends on what the strategy will be. Let's say, for example, we were trying to just do a quick fix and flip on this property. Then the property if the happens to be selling 990, off the bat, the calculator gives you a possible purchase price of 693. This is based on the fix and flip strategy. And we noticed that that's what the tax assessment did say, or 667. That's basically what the tax assessment is, really close to the tax assessment. So again, if the auction happens to start that low, then it's definitely going to be a great deal. But again, most likely it's not going to be starting that low whatsoever. If you happen to get lucky, by all means, that's a fix and flip. Now, let's say you're trying to buy and hold, maybe rent it out, then now you're able to purchase the price of the property at a higher price point. And if you're trying to wholesale the property, then you can see where you need to be standing in terms of like wholesale. But that's a possible purchase price. It's not a guarantee because again, you still have to do further due diligence. So part of our further due diligence is if the property happens to be selling at a high price, let's say $990,000, you want to spend $54,000 on repairs. And again, based by the looks of it, it does look like it's in a great neighborhood. The property, if you're a fix and flip investor, you want to make 15, maybe 20%. So let's play aggressive and let's see if we can get 20%. Then the property needs to resell for 1.3, maybe 1.4 million for you to make your 20%. Make your 20%, pay the agent fee, pay the closing costs, and also pay for the updates as well too, and how much it is that you got it under contract for. So after all those expenses, again, part of it, you just want to make sure that you get your cut. Then this is how much we need to sell based on the asking price. Now, if you happen to get the property at a lower price, like let's say at that wholesale deal, and then you're trying to find it to an end buyer, then your end buyer needs to sell the property at $915,000 for them to make their $20,000 or 20% profit whatsoever. But of course, we have to go further into like into like the area. Let's see what kind of area it is that we're getting ourselves into. What I like to look before I even start looking for properties that have sold or properties that are under contract, I want to get an understanding of the neighborhood. So off the bat, and this is what I love Redfin over Zillow, because it gives me these details of the schools. So I want to make sure how close are these schools, and also what kind of schools are we going to be looking into if we happen to be a family to put into this home. So the schools looks like they're average 5 out of 10, 6 out of 10. So they're average schools, not too good, not too great. Um, Next is get an understand of the area. And where's it at? Where's it at? Um, where is this? Where's the neighborhood analysis? So for some reason it doesn't have it. I think it's just because it's not listed on it. But something that I love about Redfin, when properties are listed, it gives me a whole different perspective in terms of like the neighborhood. So let me look for a whole different property. So let's go with the zip code where our property is sitting. And should I duplicate it? Actually, let me go back. Let me duplicate this. And part of analysis, you're always going to be opening extra tabs. So just giving you a heads up, you're probably going to have 2 or 3 tabs opening, maybe even more as well too. Let me see where the property is sitting. So I like to use Street Viewer so I can understand where the neighborhood is. Again, I can already tell before I even looked at the map that was going to be a great neighborhood. We have this elementary school, which is really great. Again, a lot of these homes are going to be very close to each other. So that's why I was thinking there was a HOA into place. But it doesn't say anything about the HOA. And now is understanding if this Emerald Drive is going to be a busy street or it's just looks like it's a main road. Because again, I'm looking for that high traffic road or that double yellow line road. And the way you're able to tell is if there's bus lines or if you're going to be seeing like 5 or 6 cars into place, then that's going to be a high traffic road. 1, 2, 3, 4, 5, 6, 7, 8 cars. So this is definitely going to be again my borderline for looking for comps. So let me draw my borderline, and my property is right over here. And what I want to look for is first let me my outline and let me redraw a better outline because I want to understand what my neighborhood is. So Emerald is my border. Olive, just by the widths of it, I can tell it's gonna be another one. And I do see this other road as well too. That's gonna be like my border. And of course, you have the Ronald Parkway or Ronald Parker roadway or parkway. That's gonna be my other borderline right there. So that's my entire neighborhood. This is where an appraiser is gonna be looking for similar comps within this neighborhood, which I'm estimating this is probably like half a mile, maybe a little bit less than half a mile radius. So I can start looking for properties in three different time frames. I'm gonna look for properties that are currently selling for right now. My property is a five bedroom, three bath 2,700 square foot home. So we're gonna go based on the square footage plus or minus 2,700. Let me go over here and let me set my parameters. So 2,700, so 3,000 all the way down to 24. And I don't have a 24, so I'm gonna go with 2,250. So no results um for sale right now. Let me see what's sold in the last 6 to 9 months. Looks like I have a 1.18 2,900 square foot home, and this is a property that sold in February. So same size, a little bit again, it's within our plus or minus 300. And just look at the condition of this. The only thing is this a 2007? This is a 2019 built home. So it almost got me excited because I like how the inside looked. And this is what a comp will look like. It's gonna be like a gray and white. So that's like that gray or a grayish white of it with the white molding at the bottom, skylights, and LVP flooring is going to be laid out throughout the entire home. And of course, there always has to be a blue. This is the blue from the chair. So always something for whatever reason. Kitchen, great countertops, great appliances, carpet. It's not the puffy one. It's like has like a pattern on it. So it looks like that's some quality carpet as well too. Shower, great tiling, so a great bathroom. Again, carpet really great, lighting great, another bathroom. Again, great flooring because again it's LVP. The only thing is I can't use this as a comp because of the year. Actually, no, I can use it. Sorry, because it's plus minus 10 years. For some reason, I was thinking 1977 for whatever reason, but our subject property is 2007. So yes, this is one comp, and then we have this other one. It's a 4.3. What year is this? This sold in September. This is kind of pushing it a little bit, and it's a 2021. So a few years as well too. There's a HOA, so that's what I was telling you. I think this property is like an HOA just because I'm able to tell by how the neighborhoods are like set up. It's usually by that certain key things that I've noticed. This one HOA as well too. So it just doesn't say it over here, but I have a feeling there's a HOA in place. I just have a huge feeling on this property. But those are the only two properties that sold in the last 6 months. Other than that, there's no other activity. And what I want to go for right now is seeing if there's anything under contract. And we do have one that is under contract, 5/3/27. Our subject property is 27. Awesome. Great floor, great kitchen. So I think I do have my three comps. There you go. So I look at when I look for comps, I look what's under contract. So what's under contract, it's what's happening right now in the market. What's sold in the past is basically what has happened in this area in the past. And what's currently selling is basically telling you what's happening, what's on the market right now, and if it's not on the contract, then this is going to be the price point that the properties are going to be selling either now or in the near future. So past, present, and future is what I like to pull my comps. If I pull a lot from the past, then cool. If I pull a lot of them from the present, which is are on the contract, then that's even better. So I'm able to understand like, hey, is this like hot market or is this not a hot market whatsoever? And this property is selling for 1.1 130. That's if it sells at that I don't know if a lot of properties out here are going beyond their asking point, or are they not going beyond their asking. And the way you're able to tell is look at the sales and tax history. The property sold for was asked for listed for 1150, and it sold for 1180. So $30,000 over asking. Let's check out this other one. It was listed for coming soon. It was listed for $1 million, and it took a long time for it to sell. What is this? May, June, July, August, September. It took about 4 months. And it looks like it sold under asking. And then this one, it really depends on what happens with this one. It's listed for 1129 or 1130. The only thing is it going to be selling, or is it on the contract for more, or is it on the contract for less? It really depends. Honestly, I'll say it's probably over just a little bit, maybe like 10, $15,000, if anything. But this is going to be a great comp. 2019 built. But I have my square footages. So let me pull my price per square foot. So this is 416. Now this is where I'm gonna get my ARV based on my property. So I have 416 price points. Then I have 391, 391, and sorry I'm doing this quick. It's just right over here, 391, and then this one was 407. So those are going to be my comps, price points per square foot. So my property can sell for 1.1 million dollars. So that's going to be my ARV, and that's what I'm going to end up putting over here. And now, based on where my ARV is, it doesn't really match where the price point's going to be on the property. Again, your subject property that you provided us, I really appreciate it. It's an auction. Again, auctions do go a little bit higher. So if you're able to get it um, less than $990,000, it's definitely going to be great, because at least you know what the ARV is going to be on this property. Now, if you put the ARV, again, if you're trying to fix and flip, we put like around $50,000 or $54,000 in repairs for this property. Now let's do the numbers. 1.1 million is the ARV. If you were to fix and flip it, fix the property for $54,000 in updates on it, then this is how much you would want to purchase it. You want to purchase it between $715,000 to $731,000, um, based on the fix and flip strategy and the type of fix and flip on it. So if the property gets auctioned below this, then you definitely got a deal, because anything below that, then now you're making profit on your deal. So if you get it under contract for $643,000, or sorry, that's the wholesale one. What's the fix and flip? 693, then you're gonna end up making an extra $30,000 on this deal. Auction bid starts at 334. Again, that's the starting bid. The starting bid, it's always an interesting point, and it's always gonna be, it's definitely for sure gonna double, even possibly triple on this. But it depends on the bank is gonna put the auction bid out there, and they're definitely gonna be pushing the property. So I got a feeling that the auction is probably gonna start, based on this neighborhood, it's probably gonna start probably like around 450, 460, depending on the bank, because it's free and clear, but they also want to make sure they get like the assess value as well too. So I got a feeling it's gonna go 450, 460, and the bidders are gonna push it to like 650, maybe even $700,000, which again, it puts you really close to what your purchase price should definitely be on this deal. And depending on the strategy for it. Yeah, most like yeah, like I said, I've seen it so many times. It truly happens, but I know for sure. But at least you know where your price point should be. It should be between 715 and 731, like the most. If anything beyond that, then you should definitely back away. But it's just I have a huge feeling on how hopefully that, and it's the auctions usually happening in the beginning of the month. I think it's what, like the first or second week of the month. So I'm not sure if it's coming soon as well too, or maybe right now at the end of the month as well too. But at least this gives you the perspective of where the ARV is, where the price point should be, and also closing costs, all that good closing costs is probably going to be 3%, 4% here in California as well too. And also the investment, Again, if you're fixing a flip in this deal, that's going to be your profit on this deal. If you're trying to make 20%, or if you're trying to make a quick buck out of it, then you'll make between 100 to like $120,000 on this deal, which is not bad, and not bad for here in California whatsoever. I know some other buyers that are like willing to take $60,000, maybe $80,000. So it's pretty a quick fix and flip. But again, it's an auction, so it's definitely going to be especially the location. I just already know for sure the location is going to be a prime area. And just by seeing this project that is currently pending, this is definitely going to be pushing a lot of attention on this property. And and it's not too bad in terms of like the tax amount on the property either. So just the location itself is definitely going to push probably some heavy pockets bidders into that, which is going to push that price point all the way up close to like that 700,000 price point. So if you're auctioning this is a great example, but that's the analysis based on what I'm finding right now, and that'll be my price point. Me as a wholesaler, I will negotiate as hard as possible. If it was with the seller directly, but again, this being an auction, it's just you're gonna get outbid with those pockets. So if you're able to get it less than 700, hey, you're making more than $120,000, and it's gonna be a great deal overall as well too. Or if you want to hold it, just because again, based on the location of it that I'm looking into, it's definitely a great neighborhood. HOA communities, usually HOA communities grow, and then a lot of properties pick up in value, and it's just safety. And you have a school nearby, an elementary school. So again, it's just a prime location that you're looking into. So I really appreciate it for that property and that analysis. Hopefully, it was really helpful for your insights, and hopefully you're able to take notes on it. So that way, if you're going to be heading over to the auction, you know what your max limit should be, and get hopefully you're able to make a deal out of that, man. So it sounds exciting, but just be ready for sure. But yes, thank you. I really appreciate it. Now I want to do the analysis in terms of like rental. I'll stick to like close to this area. The only thing about California's rental properties are gonna be really risky. And what I mean really risky is gonna be more of it's going to be more on the cap rates. Cap rate basically analyzes a risk. If it's lower, a lower price point is going to be a little bit riskier because you're not going to be making a lot of money in the beginning. And if the cap rate is high, it's usually going to be a lot of Midwest or a lower class, like C, maybe even D class communities, or blue collar workers, just a heavy blue collar workers community is going to be a higher cap rate. So it's just cap rates could be very low here in California, but let's see if we're able to find something in terms of like this area overall in Vista. So let me set up my filters, and then let me switch over my calculators from the ARV one to the complete rental. And let's see what we got in the complete rental neighborhood side. I'm gonna start off with the multifamily. Let's see what kind of deals we have. Usually for multifamily deals, I want to see if there's any information about renting. If there's no information, I do have some free resources. Again, it all depends on where you're coming from, but in terms of like wholesaling, but you guys know I provide a lot of free resources. So the first one's going to be Zillow Rent Estimate, and the one after that is going to be Zumper's average rent tool. And with this, I need to get, depending on where I'm looking into, let me check out the properties first before I put in the rest information on the Zumper side. Let's see what this one. Usually for properties that are rental, I always like to look for properties that have no work. Good information. I have knowledge. To get to see you next week. See you next week. I really appreciate you joining. Thank you. Thank you. Usually for a lot of these rental properties, I'll look for minimal work. So it's either the tenants already in place and they're long-term tenants, and then the property it's in really great shape or great condition, or it has done some updates been done to it, where I can bring in I barely have to bring any money in besides like my down payment or whatever I want to bring into it. So this looks in good shape. Just a few things that are outdated, like the bathroom. The only thing I don't like about this, it's like it's in the hills, and seller's a licensed real estate broker. Unit itself is a duplex. It's a non-conforming, and a studio is not separately metered. Okay. So far I don't like it being a studio. Studios, and it's on the hills as well too. It's a duplex and it's a real estate broker property. And usually with these, they're firm on the price. So that's a deal I don't want to fight with. Um, Let me look at the next one. 99432. Okay. Old Colony Road. Let's see. So there's two units, two legal units. Okay. Currently renting 2,500 per month. I hope it's each. Ideal for investors. This property presents. Okay. I don't care about that. Conveniently, RV space. Let me look at the pictures. So it is in the big land. So one side is going to be a RV and the other one's going to be a, oh, you have another duplex. All right, cool. Uh, yeah, it's just gonna be more of a ranch style. And usually with ranch styles, I have to worry about lot size. But let's see. Man, you're on point to the Eric. I appreciate it. Let's see. What do we got here? On this duplex. So we got a duplex provided to us. Awesome. This is the first time I had a duplex provided. Um, if you happen to know like the rent, it's perfectly fine. If you don't, that's perfectly fine as well too. So this is what I do. Pull in Zumper. I type in Zumper average rent, type in the city, state, and zip code, and then bam, it's gonna be the first link off the bat. So this is going to be a duplex. I don't know if it's a one bedroom, two bedroom, or any of that by any chance. Um, Bedroom. Let's see. Let me put the address on. Oh, not that. Let me put the address and see if there's any information on Zillow. So sometimes one platform is going to provide you no information, and sometimes another one's going to provide you some other information. And let's see what we got. Some home details. Here we go. None, two bedrooms. Is there a, in that area, there are several other duplexes nearby. Oh, okay, cool. Uh, I'm gonna use this one. I don't know if it's like a 2-1, and if it's gonna be a studio as well too, though. This is the thing about some of these properties. Let me check it out. Let me check out the neighborhood so I can get like a sense of what I'm looking into. Um, what I don't like is the neighboring home, how the garages look, unless this is the home. Like one side is one unit and the other side is another unit. That's the thing I don't know about this neighborhood. So that's why I always like to scout. But no, this is how homes are over here. If you know what, I'm gonna use this. What county am I looking into? So I'm gonna show you guys another little hack so I can understand. Yeah, one side is one unit, the other side is another. Okay, okay. San Diego County. So this is what I'm gonna do. Um, so I can confirm if both sides of the land is owned by the same owner. You never know, especially trust me, I've seen it a few times. Is I like to use city parcel viewer. It's gonna give me a bunch of information, and this information is public information to anybody and everybody out there whatsoever. Um, so the address that we're looking into, let's find out. Um, Not all platforms are this simple as well too. Some of them are very difficult where they want you to get the, oh man, where'd it go? Where'd it go? Whoa, 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 where are you going? Some parcel viewers, it's literally down to the what's it called? You have to put like an APN number, which is this crazy informational fact right over here. Excuse me, this long number. Sometimes that doesn't even work as well too. So you have to find so many things. But parcel viewer basically helps you understand the land, and if the land happens to be split up for whatever reason. So if you come across a property that, let's say the one that we're looking into, this lot is split into two, it's two different addresses, and the two lands are owned by two different people, then that's going to be a conflict of interest on that property. Or again, I've seen it. Or sometimes it could be where that land and the seller is selling the land right next to it because again they happen to own it. Then that's another case as well too. But parcel viewer, it is essential so that way you can know where the land ends. And also for like constructing like fences or anything like that. Usually when you have like neighbors that are like down to like you're crossing my line, like all right, let the city negotiate this for us, and we'll work on our way on where I can put my fence and where you can stop complaining. But this is what it does, and also it gives you more information about the property. Something's could be like taxes, something's going to be assessed value as well too. The only thing is why is nothing popping up? Here we go. Um, so, and then usually when you're getting a property in the contract where it says like the legal description, sometimes this is what you need to put in that legal description as well too. So the property is 1.3 million or 1.4 million. No, 138, sorry. Total assessment. So it is a two bedroom, one bath. You see, and this is essential. It is essential for me to find out, which that's where I'm talking about unit number two. So you are right. Yeah, that other side is unit number two for that address. So it is two units in one side. Uh, the question is, what is the other unit? So if that's a 2-1, is it a 2-1 as well too, or is it a 2-3-1, 2-2? So 1547. And if you guys don't know, California has their numbers 1549. All right, cool. 1549, 1547. 1549. Bam. 2-1 as well too. All right, cool. And you guys saw that both of them have one side each. So they're both 2-1s, 2-1s, 2-1s. All right, cool. Now I know. So now in Zumper, that's what I'm gonna look for. I'm gonna look for an apartment because again, it's a duplex. So duplex, triplex, or quads could be considered as an apartment. And I'm looking for a two-bedroom. How much each of them should be renting out. So rent should be 25.95. Now let me get the address again because I need to go through Zillow. Let me see what Zillow rent estimate is. And let me put the address there. And rent is 26.95, 25.95. So let's go with our lowest number of 25.95. The property, um, I don't know if you happen to know how much the property or how much the seller is asking, because that's a key factor into it. If it happens to be an off market, it is perfectly fine as well too. I'm going to assume that the homeowner is definitely going to want really something close to like $550,000 or maybe even 600,000, because again, that's how properties are out here. So I'm gonna go with $550,000 from the seller wants, right? Then the property, I'm gonna put a 20% down payment. My interest, 7.5, maybe 8%. They're going high right now. My monthly payment is gonna be $3,200, principal, interest, closing costs. Again, it's gonna be probably like 3%, three, maybe 4%. It's 2% in all reality, but I always like to play it safe just in case of anything. Plus my closing costs and my down payment, I need an initial investment of $126,000. Now, we did notice that it is two units that are 2-1s. So I'm gonna head over to the 2-1 section, put two of them. Both units can rent out for $25.95. The other best route to do is, especially if we're looking like in the area or where our subject property is, let's look for properties of what's currently renting out right now. So two bedroom one. Let's remove the boundary and let's check out the area. So this is a 2-1, 2,500. This is another one for 2650. So we're literally spot on the rent. So awesome. That really helps it out. So 25, I'm gonna go with 2,500. Play it safe. 2,500 each units, 2 units. There's no garages, so it's just, or there is garage. It really depends if you want to charge them for the garage. I know some tenants do. I mean, some landlords do. Some of them don't, because they do have a garage available. That could be like $50 extra per month if you wanted to. So we have 2 garages, $50. That brings an extra $100 per month. So my monthly rent on this deal is 5,100. Again, that's if the seller wants $550,000. Um, Now let's go through the expenses. Expenses, I can break it down to the dollar, especially what I like about Redfin or Zillow as well too. They have like their own numbers estimate. Where's it at? Where's it at? Right over here. So if you want to break down your, or you want to customize your calculations and everything, um, where's it at? So original loan amount. Where's the where's the calculation? It doesn't let me customize the price point. That's so weird. Oh, 10%. Oh, here we go. Sorry. Um, oh, what's the asking price? That's what I don't get. Anyways, but you can use that little tool if you want to break down like your expenses, because your expenses are going to be taxes, insurance, HOA, if there's any maintenance, vacancy, and property management. If you happen to be like out of state or out of the area, then you're going to have a property management manager for you. Um, but it really depends on where you are. Or again, if you want to break down $2 to the dollar, you can break it down. I like to use two simple rules. 40% if you're going to be having a property manager for you, that's going to be all your expenses. Again, taxes, insurance, maintenance, vacancy, everything. I'm just going broad right now so I can get like a quick estimate. And the other strategy could be 30% if you happen to be the landlord for the property. So you want to manage the property, your own investment yourself for maybe like the beginning, maybe like the first 2, 3 years, maybe 5 years, whatever it is, the time frame that best fit suits you, so that we can save some money and bring more into you, then by all means, go with a 30% a rule, if you're trying to, again, manage it yourself. So for me, it's here in California. So let's say I'm local or I'm willing to make like the trip over here. It's just I need to have like somebody that maintenance or somebody to like check it out. Even if I have like the tenants email me that, hey, this broke it down, I can send somebody from Fiverr and that Fiverr guy to do like the work and just get billed like that. And so, and I'm managing everything else from there. So everything goes directly to me, to my email, to make sure that my tenants are really happy and just make sure everything is really up to date and whatnot. So really minimal work. So let's say I'm doing 30%, I'll do for the 30% rule or investment on this so I can bring some extra money in it. Now the analysis breaks down a few things for me. First is the gross rent multiplier. This basically determines the price and what the income is it's that it's bringing me. So I actually didn't break it down. My property's income is going to be $5,100 every single month, a total of $60,000. That's really great. And my expenses are going to be $18,000. So after all my expenses, most of them actually, I should be saying, after most of my expenses, which my net income for me to keep in my pocket is going to be $42,000. Now, the next thing I do have to worry about, it is definitely one thing, which is mortgage. So I do have to make my monthly payments. My mortgage payment, it did say it was going to be $3,200 based on the down payment and also on the interest. Again, it's going to vary. I'm just playing it safe right now with going by high numbers. My $3,000 payment, I have to subtract 3,000, multiply that times 12. It's called debt service. A debt service is pretty much mortgage. So I subtract my net income from my debt net service, and the property, it looks like it cash flows me $3,300 every single year, or a total of 2,700, I mean, sorry, $277 each single month. Not bad if I'm managing myself. That's the thing. I have to manage it myself, so that's how it gets. It does bring its positive cash flow. Let's say if I don't want to manage it myself, am I gonna be making some money? And as you can see, I am losing some money. I'm losing around $2,600 each single year, or $223 each single month. And it's perfectly fine because then maybe I can write this off on my taxes as well too. So I can play a tax strategy, let the property appreciate for the next 5, 10 years. Maybe cash out refinance, depending on how it is, because the way interest rates are right now, they're really high. And what the government's probably going to be end up doing, especially once rates start to drop, if they happen to be dropped, because they still haven't dropped for whatever reason. I mean, there's a reason, but I'm just saying, for the reasons that are the rates are not dropping right now, because of inflation. Once rates start dropping again in the next 5, maybe 10 years, what they're gonna end up doing is they're gonna end up costing more on the cash out refinance. Usually costs around $1,600 to extra to like cash out refinance, and they're gonna bring their fees a lot higher. um, so the fees are for cash out refinance is going to get really expensive. So that way, not a lot of homeowners are cash out refinancing whatsoever. So cash out refi is definitely going to get expensive in the future. So it could be a strategy I can play, or again, I can just play by writing off the property as a negative property that cash flows, let the property depreciate. But again, the only thing that what's going to be happening with the property, it's definitely going to be appreciating in the next 5 to 10 years, of course. And then maybe then I can do like a 1031 exchange, 10 to like 15 years time frame. So that could be a strategy that I can do on that. But again, that's if the property that's because the property is not cash flowing right now. But if you guys did notice, if I were to manage it myself, then it can bring me extra money. And that's basically me. My income for managing the property myself. So I get an extra $3,300 a year extra that. Of course, there's going to be taxes on that, but this could be a whole different thing there whatsoever. But this property, the risk on it is a 7.65% cap rate. So that's buying it at that current price point of $550,000. So when we're looking at deals, there's going to be two things, especially when we're looking at risk, or at this case point, the cap rate, and also depending on the cash flow as well too. I can understand where the market is in terms of like this area. The simple way to understand it is I get the city, the state, and the zip code, and then type in average cap rates in city, state, and zip code. Bam. Off the bat, it tells me what the average cap rate is based on the city that I'm looking into. So I'm looking at a 5.78. My investment right now, it's a 7.65, which is really good. Again, that's based on the rent and the property's price point. But now let's say I negotiate with the seller, so I want to push a little bit more. Maybe I can negotiate on a lower price point. If the property is at 7.65, let me start my negotiations high so that way I can work low. Because the way when it works for multifamily investments, it works like this. You always want to buy it at a high cap rate and then sell it at a low cap rates. That's why a lot of these cap rates are going to be very low, especially here in California, compared with like other states. But properties appreciate more here in California than any other areas, in comparable to like a lot of other states as well too. So again, it's a battle of location, pretty much. But again, it's all about negotiating as well too. See what kind of price point I want to start off. Usually, I want to start off like around 10%. Again, the higher the cap rate, the better it is, because now I'm able to do one thing, which is lower down the price point. The rent stays the same. If I'm not able to lower down the price point, then the other thing I have to do, which is step number two, is raise up the rent. Right now, we looked it up. The rent is pretty much capped out, so I can't raise up the rent whatsoever. I'm capped out at the rent unless I do a different strategy, maybe Airbnb, maybe look for some student housing where I can rent each single room as well too. There are so many things that you can do in terms of like other strategies. Those are going to be different types of analysis, but again, it's understanding how much income can you produce out of the deal. At a current rent market that it's at right now, like I said, I'm pretty much capped out. Um, But now again, yeah, the very first thing that I can do is negotiate on price. So I'm gonna push a little bit more with the sellers, try to negotiate, of course, see what I can get. So I'll start it even at 10%, and we'll probably negotiate, and maybe we will end up closing like the deal around 8.5%. And let's see, 8.5% puts it close to like 494,000 dollars. So let me see what that $494,000 price point does to me in terms of like mortgage payment, and also like expenses. Sorry, not expenses. The expenses are going to pretty much be the same, because it's based on the income of the rent, but it's going to be down to like the mortgage of it and the interest. So now my new cap rate, it went from 7.65 to like 8.52. And then now my cash flow, again, I'm still managing myself. My cash flow did double from 3,300 to $7,200, which is really great. Maybe now I can push it down to like somebody else manage it for me. Again, I'm doing very minimal work, but now the property still cash flows, even if I have somebody else manage it for me because I got tired of it. And that's an extra $1,200 of income every single year. Or again, if I still want to do the work myself, then again, I can, it's going to definitely 5x my cash flow on the property. So it really depends if you're looking for local investments, but if you're not local, then you have to stick to having a property manage it for you. And I like these numbers based on the cash flow. The cash on cash, again, it's just California. It's always not going to be really too pretty whatsoever, but the cap rate is definitely great. And again, it just let the property appreciate over time, and eventually later on down the line, I know what the cap rate is at the current market. Maybe in the future it'll probably go up a little bit, or maybe drop like a little bit as well too, to understand my markets. But if I know where my average market is at 5.78, and I ended up getting deal at 8.52, that's already with all the expenses, the taxes, maintenance, insurance, HOA, if there's any vacancy, property management, and also the mortgage included, then that's definitely a great deal that I'm looking into so far. And again, later down the line, if I want to sell it, I'll try to sell it close to like that five, or depending on where it is in that price point. But this is what that analysis does for me. It really helps me now significantly understand where I should be looking into my numbers, because when you're looking for multifamily properties, it's really down strictly down to like the numbers whatsoever. So hopefully that's able to help you guys understand that. And the property does need some work as well too, so I can definitely negotiate on this, because I see the left side of the property definitely can definitely need some work as well. So I definitely probably have to negotiate on that side, because that siding and the roof maybe as well too. Just do some extra touches like on the property. So slowly over the years, it can definitely pick up more in value. But I do see that those repairs need to be done. And depending if the tenants want to stay as well too. Some tenants want to stay. Most of them really want to stay because they've been long-term tenants, and they don't, it's really hard for them to like move and relocate and go through that process of getting the time off to move and whatnot. But it really have to work with that as well too, and also see how much rent they're able to get as well too. Because if their rent is less than that $2,500, then that's another thing that I have to play into, where I have to play a lot of the game in that price point. Where instead of getting it for 550 or even get it for like 494, I really have to negotiate down to like the low 400s, especially with those updates as well too. But that's pretty much my full analysis on both on the fix and flip side and the rental side. You guys have the full privilege to unmute yourselves if you happen to have like any questions by all means, or if you might want me to retouch up something that I touched bases on, or just any other questions in terms of like real estate wholesaling or real estate investing overall. You guys can drop your questions in the chat, or you're able to unmute yourselves if anybody has any questions.
Hey man, how you doing? Hey, I appreciate the all the information you dropped. Some like some super helpful stuff. I was just wondering, like, do you wholesale like here in SoCal, or like do you wholesale out of the state?
Wholesale out of state. Not so much. Right now I'm looking for my own multifamily investments. So that's why a lot of
Mhm.
these um And I'm looking a lot into like a lot of red states, just for tax purposes as well too. And also, there's some great incomes out there. There and some of them are appreciating really good. So there are some good markets out there, and it's just less on the down payment as well too. But occasionally I come across some wholesale deals. But most of them I don't do wholesale here in California, whatsoever. It's just there's not a lot of margins. For investors. So um it's literally just challenging over here in California. It's just too expensive, man. But a
Yeah.
lot of deals are for sure in other states that I've come across. I mean, you can still get a deal, but you have to put in like the work over here. And I already put like a lot of work on other states that um I already do, what is it, 5 markets that I know like really down to like the numbers and the areas. So I don't want to learn California. So I do happen to come across some deals here. I have some buyers here as well too that are always like asking me, "Hey, do you have anything?" I'm like, I always let them know if you want to invest out of state, let me know. But I don't have anything here in California.
Okay. Thank you, thank you.
Of course, you wholesale over here,
I don't, man. This
starting.
is actually like I'm just like studying, man. I was like, let me learn as much as possible right now. And I'm like, dude, you just dropped like